Now, 3 years ago, the average price of a new car was $39,000, and today, this is per Edmunds, today it's now $48,000. That was the average transaction price, and I'm afraid those numbers are only going to grow as we're seeing the United Auto Workers put pressure on the automakers to raise their wages. And what's that going to mean? That's going to mean automobile prices are going to be going up, and also if commodity prices are going up, well, it's going to cost more to make those vehicles. Cars are going to become extremely expensive. If you have a car that's already paid for, my advice is keep it. Don't trade it in. This is not the time to be showboating to show the neighbors you got a new car. This is the time to think smart, save your money, because tough times are coming, folks. Now, the largest U.S. banks are facing the worst write-off loan debacle in the past 3 years. In Q3, net charge-offs are likely to amount to more than $5 billion. And that's per Bloomberg. And that number's going to get worse. We're seeing commercial real estate get absolutely wrecked. We're seeing small business bankruptcies surge at the fastest pace since the great financial crisis. So we're only in the beginning innings, the first inning of the banks taking it on their chin. And a lot of them are not going to be here. A lot of these big names that we see, that we pass by every day, in a few years, they're not going to be here. Now, a week ago, Janet Yellen said the U.S. can afford 2 wars. And I got news for you, Janet. We can't. The American public cannot stand any more wars. And America would not be in the financial debacle it's in now if George Bush had not gone into Iraq. And we've been in wars ever since, nonstop. And it's costing the U.S. its financial stability. As I look around in this country, I'm seeing homelessness increase. I'm seeing the mental fitness of the people go down. I mean, heck, you can drive all over the deep south and you can see people with blue tarps still on their roof. And we're sending billions of dollars overseas. We're spending billions of dollars on bombs and missiles that we're not getting anything from. We're not getting any benefits from a building being blown up somewhere in the Middle East. Now, China continues to dump U.S. treasuries at a record pace each month. And what's that going to mean? Well, it's not going to be good. And we're seeing the ramifications now as treasury yields rise. And who's going to be there to pick up the slack? Who's going to be the big buyers of U.S. T-bills now that China is dumping them? So I don't know where this ends, but it's very likely it's not in a good place. Now, many of our big banks here in the U.S. are laying off, are shrinking in some type of capacity. And in my belief, it's not by choice. It's by necessity. They are in survival mode because people are behind on their loans. Businesses are going bankrupt. No one can get a loan and the banks will not loan any money out. So if you have someone or you know someone or you are that someone that's working in the big bank industry, you better financially prepare yourself now, because in the next year, it's very likely that the head count cut in that industry is going to be in the tens of thousands. Now, if you like this type of content, please like and subscribe. Thanks for watching.